You do wonder what happens when and if the FANG stop working. Why don't we talk about that, the coronavirus and the markets? Kevin Mahn is president and chief investment officer of Hennion and Walsh Asset Management, also CIO of Smart Trust UITs. All right, Kevin, welcome. Good morning. Before we get into coronavirus, the markets, everything else, because Dow futures are up nicely here, I want you to sort of follow up what Mike was talking about here. Is there any fear that you have, and I've pointed this out, that Apple and some of these others are so big, they're such a part of the market, that if they start to go down ever, is there any way the overall market can go higher? Because everybody owns ETFs. Apple and Microsoft are the QQQ. That's it. If they go down, can the rest of the market go up?
Well, as we know, Tesla is not in the S&P 500.
No, that's its own beast, right?
It's the NASDAQ 100, and it's meaningfully in there as well.
It's going to have a meaningful impact on the market averages. But I think what we're seeing right now, absent the coronavirus, which shook investors last week, is the continuation of momentum we saw coming out of 2019. The fear is the fear of missing out on future upside potential. We've seen earnings come in stronger than expected, 68% beats on the upside, 64% beats on revenues. Looking to the first and second quarter, we anticipate earnings growing at 5% year over year and 6% year over year. So I think that leads to more upside potential for the overall market.
Even with worldwide pandemic fears.
Yeah, I think.
There are literally 500 people on a cruise ship for 2 weeks now, quarantined off the coast of Japan.
Yes, and I think what that speaks to, Brian, is the opportunity, the biggest opportunity we see in the markets this year, and that's biotech. The need for innovative healthcare solutions. This is just one small example of that. 28 M&A deals in the biotech space last year. We expect that to continue in 2020.
The market, to your point, has rushed to try and say we have a clear sight to when the risk has peaked from the coronavirus in terms of growth, in terms of the spread of the disease itself. I do think that shows you a little bit of a twitchiness to say, hey, we think we know how this playbook works. What happens is the bond market eased conditions for us because everyone got scared and rates went down and central banks all of a sudden were back in play, maybe for stimulus later in the year. But maybe we don't have to undergo that much near-term economic pain to get that gain. Not saying that's how it plays, but the market, the muscle memory of the market moves in that direction.
How much of this then is the Fed? Because they're still buying in the repo market. Let's not forget they are still, don't call it QE, Mike, but they're still doing QE.
Because it really isn't, but it's the background music. And it's the message of what they're doing is we are going to prevent dislocations in the market that come from somewhere we didn't expect.
The Fed's got our back.
It's got our back in a broad way. And it's, look, it didn't even, the repo is just to keep the stated public rate where it's supposed to be.
Yeah, but it frees up cash on the banking side.
Not in a very direct way, but yes. The bond market, though, went to a point of saying we're going to price in another actual Fed funds rate cut later this year. I don't know if we're still going to be doing that in a few weeks if things firm up, but that is the part that I do think that has overtaken the market narrative in the short term.
Kevin, I thought Andrew brought up a good point earlier in the show when we were talking about Iowa.
Thank you.
And he brought up the point that maybe Iowa was good for the market because it ended up being positive for Mike Bloomberg and ended up being positive, some interpretations, for President Trump, and less positive for Bernie Sanders.
Yes.
Is that playing into some of the positive that we see in the markets?
I certainly think that is. If there's a continuation of this pro-economic growth agenda, that certainly bodes well for the markets. What I think also has the back of the markets right now is not only the Fed, but the U.S. consumer. We saw that in Amazon's fourth quarter reports, significant beat. We saw that in Ralph Lauren's earnings reports. We saw that in Chipotle's earnings reports. We saw that in Disney's earnings reports.
But those are all, I hear you, but those are all looking backwards. I mean, I think that with this coronavirus, is there any indication at all? I know there's only, thankfully, been 11 whatever cases in the United States that people are not doing what they normally do because of this. I don't see it. I see the planes are packed, the airports are packed, restaurants are packed.
Anecdotal stuff, but not much, no.